Welcome everybody. Yep, it's a live stream. That's right. We're in the studio. We're in studio talking to you. It's the market sniper, the crypto sniper today, and the reset sniper as well. So we're talking out about crypto hat, invisible hat. Yes, indeed. The Georgian hat will make a comeback, by the way. But anyway, in the meantime, we're going to talk to you about Bitcoin and what's just happened over the course of Sunday into Monday. Yes, we're going to be doing that. And further to which, we're going to take a look at the total. We're going to take a look at the Dixie, the dollar, and why there could be a little bit of sniffings that could just bring a little bit of a challenge, a little bit of headwind. And we're going to talk about, we're going to include gold as an anti-fiat. We're going to talk to you why there might be a dull period right now. It might be a dull period. Yes, I was showing and sharing outside of, on my Twitter, redux calls of big shorts in and around the 6K level down to 3.7. And then previously at its secondary high where it made 14 and then came down to around 10 that we were saying it was going to make 6 again. But I'm not expecting that. I'm not expecting that. That was a little bit of cheeky bait. We're not calling a bear. Remember, we are in our personal assessment of the technicals, a bull market right now. And that means you're having staircasing events of move up leg, partial down leg, little bit of a sell-off, move up leg, staircasing, partial move and a bit of a sell-off, etc., etc. And I just think you've had a good run up to this point. Now you'll say, but, not higher than the previous time. And for that, we're going to need to go to the charts. So here we go to the charts and have a little look at our Bitcoin action. Yep, so on Bitcoin, let's close the eyes, close the eyes. My eyes are mince pies. So daily, this is what's happened. And I'm going to just check structure-wise. Yeah, that's the right one. Let's go down to 4 hour on this. In fact, let's go macro. I'm going to remind everybody, we're back in the studio. Let's go macro. So we have said, and people get confused by messages because they get piecemeal some of the arguments. They hear us say one thing and then they hear us say another thing, and it can be quite confusing. So where are we standing? Macro. You see all these big scribble draws. I'm going to just turn all the noise off for a little bit. This was, by the way, our legacy 6K bear calls there and there. You actually ran 3.7 on that one, and you ran 3.2 there. So we had closes at 3.7. But that's not what we're talking about. We were sharing that on crypto Twitter it is, sorry. But what we're talking about now is this post-bear market that we had down here that finished at around the 16K, which we got the perfect head and shoulder targets for to the downside. And since then, you are in a Dow theory type environment, a Dow theory. Let's draw. Let's take that last one off a little bit. Let's draw and show you a series of higher highs and higher lows. That's right. So we're in and around something like this at the moment. You can see we're on the high end of a little bit of a channel move. So this is typical Dow theory of moving up. It's not the runaway bull that you want, the absolute bullet that is just screaming up. It is a little bit of market bullish build-up. So here's your sine wave in all of this, and it's going like this. And I would imagine that we could just come off a little bit and rest. It doesn't necessarily mean it's going to go all the way to the bottom end of that channel. Often, by the time you've drawn a channel, it ceases to be valid. So I don't overrate the value of channels unnecessarily, but it can still hold for a while longer. It can still hold for a while longer. So great to have you on the live stream, and I'm looking and checking exactly all who's checking in, where you're checking in from, what part of the world are you checking in from, and what are you thinking Bitcoin's going to do next? Well, we are saying that it's made a couple of key levels, as you can see recently, and we think it's just pushing a little bit higher maybe, but it could gas out for a little bit, and we're going to come into some of those challenges that are also being implied. So with this channel, this is all being done on the weekly time frame. You can see by that, what I'm referring to is you're a little bit on the high side. Let's drop it down to the daily. Let's drop it down to the daily. Now, first, I want to highlight in this more recent up move that you've got here. Get that in. It's been less blow off. You can see this got really skittish, really choppy, and then you had that big shooting star over there. So let's change color, do it in the blue, little boy pippy blue, and you can see you got that shooting star there. And then the minute you took out the low there, spill, next thing 38. That was after making our 47.5K. That's right, the number we gave you that said you're likely to fail in. That's right. Now I'm hearing other YouTube channels starting to reference 47.5K. There's a couple of people that are watching us and regurging some of the things we say on their ever more popular Bybit link type channels. So we're very flattered by the imitators. So now you'll hear about 47.5 on other crypto channels too. It's not the most logical number for most, but anyway. So what's going on here? You can see I had bigger candles for longer, and it's a little bit less skittish. It's been quite a steady move up, and this is only really a little think. It's a little think. We need to go in there a little bit more detail, and we'll be dropping the time frame. Note how we come from the highs and we drop it down, down, down by the big time frame to remind you where you're at. So let's just put that line back on. Yeah, we can take it off again. So let's take you into the time frame of the 4 hours. And this was the setup trade that we spoke to you about. We gave you a little bit of financial mathematics of risk reward trade. So, by the way, you have since seen, just to recap this, it's quite important this, you have just seen the combination of two patterns deliver a 1:9 risk reward trade. Assuming you got in at the last moment, which is in and around, let's go to 2 hours even, in and around that level as indicated there. You can see 8.83 in and around if you got in at the very last moment, one over there. Now, actually, if you're getting a reward of 9 times essentially your risk, surely that should only work 1 every 9 times if this is an efficient random market. But I just gave you this trade, boom, and told you about it, and very first time, it's worked. Isn't that funny? Do you think the odds were 1 in 9? Do you think the odds represented a neutral market? In other words, are you a market efficiency guy? There's no value to technical analysis, more specifically HVF method, because technical analysis has been corrupted by the indicator crew, by the program selling crowd, by the write a book and devise a new indicator crowd, and the fake TA and the lagging indicator bunch. They're just so corrupted. HVF method specifically suggested to you that you're going to have a better than a 1:9 probability of outcome of getting a 9 times your risk. And in the very first one, maybe I'm just a very lucky guy. Is this a fluke? Are we lucky? Let's have a look at your comments. Give me your comment. Is that just plain lucky? You know, I should have pulled 8 duds and then only on the 9th one got this one, and I just happened to have, you know, being super lucky. I don't know. You tell me. You tell me. You tell me what you think. But this was first call, first done. It's kind of probably the outcomes not pointing to 1 in 9. You know, if the guys put it down in front of you and it happens. And that was 2 patterns. We were relying on 2 patterns working. However, as I highlighted last time, they both were conferring and confluencing and suggesting the same thing. So actually you have footprints in the sand, God's handwriting on the wall. These are our phrases for technical analysis and why you're getting a little look into the future on a probability basis that is far higher than that which is random. Random said to get 9 times your reward, you should have to hit 9 shots so that you end up flat and neutral. That's trying to get something 1 in 9 times. Think of the dartboard with all the thin lines, with 9 different colors and a blindfold on. How many times are you going to have to throw to get the thin green sliver that's next to the red and the yellow and all the others? Well, you've just seen it 1 in 1. So maybe there's only 2 or 3 colors instead of 9 colors. Maybe they're quite fat bands and you get a better feel of where you're throwing. This is the power of HVF method, the best form of all the most distilled value items of technical analysis, plus some bespoke provided by us, the originators of the HVF method, added therein to what adds value in real trading. Because it was given to you before, we shared on Twitter as it was breaking, and it's done everything we've said. Now, it doesn't always work, especially at 1:9, 1:10 type ratios. So you'll get, even if you get 40% of them right, you are a winner. Remember, it's not about being right, it's about making money and managing the risk so that on those events where you are wrong, you're only losing that single 1 unit. So anyway, back to the technicals with a little bit of a lecture and a preachy bit, but you'll forgive me that because we are back in studio. There was your first, that was your head, and there was a long flat right shoulder, not as deep, not as high momentum. Look at that wick there on that side. More flat, didn't run as low either. You can see the low there. So we talk about a shallower right shoulder. I think that's my right hand, ladies' right hand, definitely. And I've transgendered recently, of course. So it's also the gent's right hand. As an ex-gent, I know that. But anyway, so this was also an upside HVF, which gave us a beautiful triggering event, and it moved promptly away. And this is what's called a low stress trade because it moves consistently fast away from your entry, which means it moves consistently fast away from that stop, which was over there at that point over there. So now done. You had your reaction. Where did that reaction of a falling wedge come from? You guessed it. The same 47.5 that we told you would be a key level over there. Isn't that interesting? Now others are talking about 47.5 because they can't help but notice while watching our YouTube channels how accurate this tends to be. They don't explain where it came from. They don't know where it came from, but they're good at copying. And that's what you got. You got your falling wedge, and this time you pushed higher. You almost made the target. On some exchanges you actually did, but you definitely cleared it there. And that's a wick sale. And by the way, even though the candle now is trending up, so let's get a closer look. We're doing fun things today with the charts, and I'm getting to share live stream with technicals. How many people will give you a live stream? How many people will give you a live stream with technicals and check your chats at the same time? You know why? It's difficult. You can't easily do it. You need clever equipment. Although I hear YouTube is bringing something. Maybe there's some innovations coming. We are using a pearl, a beautiful pearl, a great piece of equipment so that we can share screens and technical. Hello from New York, says Jewelry Affairs. Some people getting anxious on XRP. It's going to be ugly, 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 ugly. And it's going to stay ugly, ugly, ugly until all of you have cried off and gone and given up and said we were wrong. Just like silver, it's going to be that kind of a thing. And then I suspect it's going to be potentially very, very right. And then you'll watch it and bemoan and say, well, it never came. It never came. It will come. It is coming around the mountain when it comes. And we will see. We are not yet in the blow-off stages, as you have realized, of this bull market. And that, friends, is good news. Why is it good news? It's good news because I've got a standing desk. Can you see this now? Ooh, yeah, and I can sit down. Isn't that lovely? It's good news because in that environment, if it was in the blow-off, it would be the end of the bull market. It would be the end of the bull market coming to the end. So it goes steadily, staircasing. The violent phase is good and also potentially the beginning of the end. Now we've got a lot of work to do. We want to keep building and going on up. This is not a bear call video. It is just saying that you could get a bit of progress decay. It's not nearly as violent. It's not getting volatile just yet. We could, of course, be wrong. It could go a little bit higher first and then turn at the 49. All these things can happen. But my suggestion is it's not the time to be putting on new leverage longs. And in actual fact, I've taken quite a lot of the gains that we've got. Beautiful gains, beautiful gains. Who got beautiful gains? Anyone trade this with us? Let's have a look at the live stream. Bills from New South Wales, Australia. Good to see you, Bill. Thanks for joining. Who took some? Germany says, well, that moved quickly. Hello from Belgium, Texas, Portugal, Hungary. Yes, it's great to see. Anybody take this trade, by the way? Not luck by you. You have been giving away free lectures for years. You're wrong sometimes, but right a lot. Correct. And we will continue to be wrong. And you will never get 100 out of 100. You'll have periods where you kind of had really good runs and you'll have dull ones. I am patient on XRP. This dog will have its day. Yes, indeed. Indeed. Greetings from Canada. Canada. Don't tell anyone. Malaysia is in the house. Good. Okay, so everyone's coming in from the country, but any of you make some money? Any of you make some money, or you're a bit too afraid? Or maybe you're just investment and taking it slow. Okay, so that was good. But what could be coming? So what's the slight threat? And as I say, slight threat. We're not calling the end of the world. We're not calling back down to 6K or anything exciting, even though we were tricking you with some innocuous tweets about legacy periods when we had called in and around the 6K level. Let's take a look at the total market cap at the moment. So if we have a look at the total market cap, you'll remember we were concerned during this period when we came back to this very important level. You see in the dark blue, 1 trillion, 1T, 1 trillion market cap. And it was like, we need to get away from here, or we're going to potentially fall through here. Whoops, sneeze coming on. Excuse me. I promise you, I've scared somebody's cat there. I apologize for that. But it's, it's the travel. So anyway, you ended up with a bit of a inverted head and shoulders in there. So you've got shoulder, head, shoulder. And in the end, that turned out to be a reversal. Boom, you had to get back long, and we did. We were concerned. We were saying this could turn into a head and shoulders. That was marginally higher than that on Bitcoin, not on total, as you can see. What's happened since total? If we take that as the naught on the fib, that's the low, and you take the last point of high at the high. Note how interestingly you just ran, and there was a real flaw there at your 68, which also happened to be in and around the 1.5 trillion. You see that? We'd already drawn that line. Why? Because we've drawn the 1 trillion, the 1.5 trillion, and the 2 trillion, law of round numbers, key levels of significance, HVF method, and you put the Fibonacci on there from the high and all the way down from the low. And next thing you find out is the 61.8 zone is around here, and you went up, 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 grinding in a broadening structure on your total, and you collapse down. And where did you hammer out? There's a hammer in there, he says. There's a hammer, and you probably can see it. You hammered out there on a head that is stuck on the 61.8. That's traditional technical analysis for you, and you bounce back up. Yep, and you had a little bit of a stall at our key legacy targets there. See the two purple lines, a little bit of a pullback, and now you've pushed up forward. So what did I say I hoped would happen? I said I hoped we don't run the previous high, and that we actually have a little bit of, my best thing for me would be a little bit of an off, a calming, and then a setup again, a nice low vol, and then we get something along the lines of this setting up for us. And that will give us a blast. I would say 1.8 is going to be an interesting trillion mark point because it's very close to that legacy high. And then you're looking at twos. Twos would be the next mark on the total. This is the total, by the way, that we're looking at. So that's why you're getting trillions here. Total. That has Bitcoin in it and all of the others. Okay, good. So that's a little bit of the total market cap. So a little bit of easing would be great. By the way, in the bodies, you can see it's gone higher, but not at the wicks level. This was highly volatile, but this is moderately more steady. So what's going on the dollar? Many people need to understand the dollar plays a role in this. The dollar plays a role in this. The big fundamentals of Bitcoin comes on the dollar going down. Look at him coming forward and back. Yep. And we talked to you about the first monarch inverted head and shoulder. That's right. The king, the one that's first, that's inside all of the others. An insider of note. We talked about it. There he stands. That is your monarch inverted head and shoulder. There you put it out. In fact, you had a final touch there. That would be armpit 1. And there was your armpit 2. That's it. 2, 2, 2. And that was your inverted head and shoulder. That generated a target there for the Dixie. How did we do? How did we do with our guessing game? You know, the 1 in 9 guy. How did we do? We didn't do too bad. We didn't do too bad. It kind of made that target. But first, it hit another level that was really interesting. It did a continuation broadening structure. Did that. It lay on the 103, a key level that we had already drawn. Key round number, all of the real rules. You guessed it. We kind of were there. And then it broke on up, took out the high, made it through our already potential next neckline in part of our theory of nestled head and shoulders and inverted head and shoulders that you too can learn with us and watch implemented daily as I give regular updates throughout the day to our community through the WhatsApp, through the beautiful app that is recently redesigned after great investment, our desktop front, and you can click the first link below to go and find out more and have a friendly chat with someone about it and have it demonstrated for you. Ask your questions. Ask me your questions. Yes, ask me the questions. You can ask questions in the chat, by the way. So in a sense, I'm going to change color for this one. This is a potential new inverted head and shoulder for the dollar. I'm just seeing that our Iranian friend, what's the name of our Iranian friend, the big podcaster, is getting, in conjunction with Zero Hedge, is getting Jim Rycards and Brent Johnson on and other people on for the future of the dollar. And I am waiting for the call, and I'm waiting my bottom lip a quiver. But the finest macro market technician on the futures markets of the currencies was not called to attend. Oh my goodness, how can that be? Oh dear, my plight is the fact that we only have 60,000 YouTube followers, not 1 million. 1 million. Hit the like button, fool the algo right now. Don't forget to subscribe. Send it to your friends. Get me on the show telling Zero Hedges what's going to happen to the dollar. I'll tell you, I have one of the best opinions out there. And I'll still potentially be wrong. So this larger structure is looking a little bit like a soft right shoulder again. It's looking a little bit like a soft right shoulder over here. So this is where I'm pointing. After making our target, we said it would soften a bit, and this was the perfect gateway for Bitcoin to make its 48.6K target, which, as I've shown, it just did over the Sunday session. New week, new vibe, new data. He just said data. What data, you cry? What data speaketh the bald man about? And he goes, well, friends, fellow countrymen, and sound money advocates, the anti-proliferation, fiat, liberation, resistance force that you be with me. Yes, we are looking at the calendar today, and we see tomorrow being Tuesday. Tomorrow being Tuesday. It sounds about right if today's Monday. The 13th of February, one of the richest days for what number, you say? What number? CPIII lie. Ooh, naughty, how dare you? Well, you get stats, you get lies, damn lies, and statistics. And they can put anything they want out, as far as I'm concerned. But you will have out of the US of A, or some say the USSA, they're losing confidence, I hear. Core CPI, month on month. Expected 0.3. Yes. CPI month on month, that is not core. You're expecting 0.2. And CPI year on year, expecting 2.9%. So here's my guess for tomorrow's CPII lie. Francis Hunt's guess is going to be that actually you're going to meet or beat a number of those three numbers, which is going to suggest more strength to the dollar. We can't cut so much. Hold on, the economy's never been so strong. Like our non-farm payrolls number, that was unbelievable. You Americans, you're just getting offered jobs all the time. You're driving on the way to work and you're getting cold call. You say, look, it looks like you're going to work, but you know, I got another job for you for 20%. More wages than you're earning. I guarantee you, we'll pay anything you want. Yeah, you know that economy that all you Americans are experiencing, where you're being pulled off the street and say, dude, come work for me, please, man, I'll pay you anything. Yeah, just any time. We can't find the caliber of such men as you, such people that are following this beautiful station. Yes, so my idea is the CPI lie is going to come in at or higher on those three measures, which means dollar up, dollar up, dollar up, dollar up. And if the dollar goes a little higher, my friends, you face a tailwind. You face a tailwind. This is my guess. It's a guess. It's a guess. I'm a guesser. I'm a professional guesser. I look at charts and I guess some. And that's why we get wrong. No one's been to the future and come back. I've certainly never claimed to myself. But I'm wondering, I am having a little wee wonder if that is not going to be the cut of the direction. And what happens if the dollar gets stronger? Brent Johnson will look like the man with his dollar milkshake, how the dollar gets stronger. He's probably partially right. A First major surge in the dollar on the basis of the interest rate spike. The theory, the Francis Hunt theory of the interest rate spike based on debt default and the absence of bid for debt. The interest rates go higher. The leader on the hiking of rates, the dollar. The dollar has a spike, crushes the emerging markets. Yes. So our theory is not popular. It's not gaining traction. I haven't named it and branded it accordingly. I should do that. Maybe more people will pay attention. Anyway, I don't care about that really. It's just what will the market do next. So the possibility is a little bit more dollar strength could come. Big CPI data tomorrow. And the crypto kids that never pay any attention to this because they think he's just an old guy. He don't know nothing about that crypto market. He does. He knows that if the dollar goes up, it's a tailwind, or it's a headwind at least, for cryptos generally. So with that in mind, be careful out there. What saith gold? Yes, another chart that other crypto kids don't tend to look at too much. The anti-fiat king. Now here's the thing, says the anti-fiat king. He's concerned about gold. Initially, we were like, hey, this could be good. This could be good. Gold go up. Hey, this could be good. Goldilocks. Goldilocks economy, you know, like Mr. Greenspan. Oh dear. Mention Al, our local pal, the biggest creator of liquidity to ensure the destruction of the Western economy. That's right. That was his mandate, and he did a great old job. This is how we were looking at it with a bias bull. Why? Because you came in up. However, with its current price behavior and its current structure, remember, when you get to breakouts that have been consolidating for a while, you are either right or you're 180 degrees wrong. It hasn't broken yet, but we're starting to ask the question, if indeed this was the big reaction that we got, and in actual fact, since then, new color, new framing, new draw, in fact, that the precious metals guys are going to feel more pain. They're so used to it. We're such masochists, you say, holding on for sound money. Now remember, they don't want you buying gold. They want you thinking it's a dud and a duffer. They don't want it up near all-time highs. So this is what could happen instead. Boom, bosh. That is what we call a slap in the face. Very hard down there. Third impulse, and then whoop, a little bit of a pop. Let's call it complex. There's a little bit of a slip through. Oh, how's your auntie? Are we actually going to break downside for gold? Down for gold, down for gold. I would say it's actually pivoting that way more now. The odds are reversing away from the upside break on gold to the potential downside. Anti-fiat God market. Who named it that? Yours truly. He named it that. How many other people on the crypto realm talk about the anti-fiat category or even think that watching gold is even significant? None of them. None of them at all. But be warned. It is your anti-fiat God market, and he looks sick. And silver has permanently stayed sick. He never even had the run with gold. He's staying sick. So we didn't kick on with gold going leading first and then the silver starting to follow. No, that didn't happen. So what's happening? Possibly a little bit of a sell. Back down. Now this is what happens. These overperform to the downside, and you are, wait for it, sitting all just above the 2K level. Wind up to break a level, works to the downside just like it works to the upside. Yep, that's right. That's what happens. I'm sorry, it works that way. There's a beautiful symmetry to technical analysis. What works to the upside works also to the downside in a similar way. And we are just above one of the most key round levels between 1 and 10,000 is the 2,000 mark. That's right. What say you all? What say you all to this? Is it good that gold looks so sick? Is it good that it is not setting up? These are warnings. I'm just talking. I'm just sharing. I'm trying to save you from pain. It's not good news. It's not good news. But hey, would you rather hear something before it happens or the possibility and maybe save yourself a little bit of downside? Just saying, hoping you can see the value in something that looks on the surface slightly negative. Dan says Bitcoin pumping 50K. Well, you see, 50K is kind of like gold 2K. That's how it works in my view. And we've been slapped down at 49 quite violently. We're crawling up more consistently. Now, I don't think Bitcoin's going to necessarily do as badly as gold because for some reason at the moment it's being preferred, slightly preferred. But if gold goes down and the dollar is going up, Bitcoin will be affected. That's right, friends. Bitcoin will be affected. So, what say ye? What asks you? They also don't want us buying privacy coins, do they? Indeed. The other aspect, which absolutely has died. I remember I was I was not an early guy. I was sort of 2015, 16 Bitcoin crypto guy. Not one of the 2010s or 11s or 12s or even 13s or 14s even. But I remember there was so much talk about privacy. It was all about Monero got mentioned every fifth conversation. Privacy was the thing. Privacy was the thing, fine people. And we were going to be escaping the surveillance state. And now, no mention. Mr. Fink of BlackRock. I don't hear him mentioning deep toil and effort to ensure privacy for the retail masses. Do you feel him wanting that for you? Do you feel his need to bring you that solution? I'm not feeling it so much. Not at all. Anyway, so that was the Dixie. You wanted to see it again. And by the way, if it were to go to the upside, let's give you a target because this, if it turns out to be that which I suggest it may, and by the way, it can take a number of days, even a week to play out this. Don't phone in tomorrow and say, it didn't go up to that number yet. Remember, there's a bit of chop, there's a little bit of churn. This is how it would look. Let's make it a nice straight line like that. Boom, chakalak. And we're going to change it from red. That's a bit offensive. I'm a sensitive guy, especially post-operation there. Anyway, there we go. Up, up, up. Let me just check something. We want to do that one more time. And we'll clone it away. There we go. So where would this, if this performed, where would it go to? So someone was asking, show us the Dixie chart again in the chat. I can see him. So if you were to, you would find yourself at 107.89 on the dollar. 107.89 up from 104 at the moment. And that's some way away. Remember, as in the journey from here to our beautifully captured target there, you can and still will have continuation patterns. This was a staircase with one flight up, one flight across, and one flight up. You can see it. And there was quite a lengthy consolidation before it broke to the upside. So with such a move that is far larger, 104 to 107.8, I would imagine 107 will prove interesting. You could even find 106 prove interesting and even 105. And there could be pullbacks along the way. But overall, there'll be a drip, drip lean on Bitcoin and he'll be swimming upstream. Oh, that rhymes. We're dropping the poetry as well. Okay, so that's old Bitcoin. What about ETH? Let's have a look at Ethereum. Currently going up and looking rather sprightly, but a little bit of a higher time frame. Let's go up to the 12 hours. A little bit of a higher time frame says it's some way off its blow off high over there, more so than Bitcoin. And this structure over there, a bit of a flat bottom and a broaden over there through the wicks, that is an ascending, wait for it, megaphone on an up leg. And whilst you're going up within that pattern, there's some concern. There's some concern on my behalf regarding the sustainability. It will follow Bitcoin. How's dominance gone? This has been a bit of a Bitcoin show, by the way. It has been a bit of a Bitcoin dominance show. Let's go right up to the top and check on the dominance so that you are not left wondering. Back well above the 50%. So actually the alts not really lighting it up. Remember we drew this, if you're a regular viewer, we drew this sort of channel. It is above that channel. You can see once again, despite some meaty sell-offs, Bitcoin is rather rude health. That was a brutal sell-off, but that was a very nice rounded bottom after that. It suddenly calmed the hell out. That was post ETF. Nice little flag continuation and up, up, up you go, just like you did there. So at the moment, dominance is strong. But this also tends to be a bit of a level where Bitcoin gets a little bit in trouble. There and there. So that wick at 55 and that wick at around 55.5. So this seems to be an interesting zone. So A, Bitcoin could lose a bit of dominance, and B, it could go down and drag some of crypto down, but maybe the alts, some of the better alts, not as much. Let's go check total market cap. Looks like a potential bear flag on the Dixie. Bear flag, I don't see that bear flag, but maybe I'll check again for you. So we want to have a look at the dominance we were looking at before we started hearing about Dixie, what we were going to show you. It's gone straight out of my mind. So back to the Dixie. Where's your bear flag? Where's your bear flag? He would be thinking of something like that. But there's not really enough to justify that. I'll try and make it happen. Not really. Or maybe a rising wedge. Not really. It's not an easy draw, that. It's working its way up. By the way, can I remind you, if we go to the bigger time frame on the dollar, you just broke the 100 Dixie and you never went any lower. And we thought that could be on. We thought you could go lower. There was that inverted structure and it failed. It reversed and it went up. We do need to check at the interest rates. Cover the Euro USD. Well, the Dixie is very close to the Euro USD. It's just the chart inverted. I will take a walk past it just to fully satisfy you. But after breaking really hard, it snapped up. So if we just clear all of this chart, what's actually starting to happen is, despite the sell-off here of the dollar, that was on the rate cuts, you're now making a rounded bottom. So you made a lower low, a marginally lower low, failed to make a new low, and now you're going high. The next thing will be a takeout of that high. And by the way, 108 run will be a takeout of that high. So you're putting in higher lows. Will you put in higher highs? That's my hypothesis. So we're basing a bit for the dollar. Not overnight, not super fast. It's not, none of them really wants to be too strong. None of them really wants to be too weak. It's a big problem on inflation. So that's your Euro USD, and you should see the same thing upside down. Bit of a rounded top coming in there. So we'll see if we sell off more and come down into these levels. So that's your challenge. Euro USD, little bit of the dollar. Is it going to be chronic? Is it going to spill? I don't know. The only thing that will make it a super big one is a demand destroying event, which is what the kind of things we've covered before. It could include a hack, could include an escalation of the warfare. Don't forget, the mainstream media have been hyping and pumping must go to war with the Russians. Must kill Russians, apparently. Apparently that will be very good for everybody. I don't know. You can make your own mind up about that. You're the best, Francis. Oh, David, you're such a pal. Not everybody agrees. Too big to be a flag? No, it's not too big. It's just not enough interactions, Diogo. I mean, there is something beginning there. It's going up at a kind of fixed rate. It could get a sell-off. You're not entirely wrong with but it's touched just once or twice. It's not super tight. And it looks like it could, on the bigger time frame, be making a larger bowling bottom. That's why the Dixie, it has me believe that it's probably on balance of probabilities, not believe, but assess, let me rather say, that it's in more of a base. Because of the strength in the SP 500, well, what happens to the SP 500 if the dollar gets strong? If the dollar starts getting too strong, it will probably be fear related. It'll probably be interest rate related. And as a result, it will not be good for the indice market. Let's have a look at the interest rates, US bonds, and we will finish the session for today. Live streaming to you with charts, looking at your comments and having a chat and a clink. These are the kind of things we do in our community. Let's have a look. Where is it? Where is it? There she goes. So what you're seeing here is, but rate cuts. Everyone was telling about rate cuts, but what happened? You bounced on our first interim of this upside HVF that also made its target, by the way, from the break there, giving you a line of efficiency like that. Great trade. You could have traded that. You can take options on bonds. You can do lots of things. Another semi-decent guess for somebody who gets told he's always wrong. Bounce on. the first interim, you're stuck around the second interim, a little bit above, you dip below, and then now you are working your way up. But you're supposed to be getting rate cuts. It seems this reaction to the downside was a little too large, a little bit too enthusiastic. You may not get exactly what you promised. And that is what we've been saying on this channel right here. They cannot cut because the debt market has to go up in value for the rates to come down. Who's going to be buying all that debt? Pension funds that are running out of liquidity and aren't getting enough of a return and are already stuffed to the gill with bonds and see an absolute God-forsakingly large amount of new bonds all coming down the pipe. They're going to say, oh, economics, rule number one, supply and demand. That which is absolutely proliferated cannot be of high value. That which is scarce can be. That is simplicity. In fact, Bitcoin is based on that. Digital scarcity, they say, by virtue of the algorithm, they tell me. I sure hope that code doesn't get chased or tinkered with. It's a bit like the virginity, you know. Once you've fiddled with it once, it gets a whole bunch easier the second and the third time. How's the Constitution working out and the rule of law with human people and Zio proliferators are all over the place? Well, one would say the Constitution is not being adhered to. But nevertheless, that's probably just me and my political assessment. But this going up, this going up, this going up is telling you people are rolling back their expectations for the rate cuts. What does that mean? Stronger dollar. Interest stay high on the dollar, but good to hold dollar, earn interest, more expensive for that property home loan, less retail money because you're paying on your credit card, because you're paying on your mortgage, because you're paying on your HP, on your car. Cost, inflation, inflation, inflation. Oil going up. Let's finish on oil. We'll do a little check-in on oil. Why is that important? Because it'll keep the inflation number up. You see, on the one hand, they're saying, we're winning against inflation. Must war the Russians. We're winning against inflation. Must war the Russians. Russia cuts production. Oil goes up. Saudi cuts production. Oil goes up. Must war the Russians. Oil goes up. Inflation goes up. You see that double speak? Isn't that interesting? How do you square that circle for me? That's right, my friends. These are the questions you should be asking. They don't even want the inflation truly down. They want to keep the pliers on your testicola vandolas, squeezing, and that will affect Bitcoin. That's why we're discussing all this. It will affect everything. It will affect currencies and the dollar, and that's why we're here talking about it. Let's go to finish on the WTIII, US oil. How are we doing? Again, you could argue, is this a continuation pattern to the downside, or are we building a little bit of a base? Low, low again, low, marginally lower low, failure to make a new low, failure to make a new low, failure to make a new low. That could be a rounded bottom. All these charts look very similar to me. Don't you find that? The dollar rounding bottom, failing to make new lows after a sell-off. The oil rounding bottom, failing to make a new low. You've got 3/4 of a watermelon smile right there, staring at you, looking at you. So what's going to happen if oil goes up? Inflation goes up. The interest rates on bonds go up. Do you think the dollar go up? Yes. Fear, pain, dollar go up. That's correct, because the dollar will be the leader, the interest rates on the leader. What happens to the yen? Yen go down, yen go down. Go look at the Nikkei shares. We'll be covering that on the Market Sniper. Don't forget to go to our sister channel, the Market Sniper, and subscribe, and to say, always notify me. Many people are saying they're not being notified. So with all these key facts that are starting to happen and occur in the charts, maybe you need to be a tiny bit careful about what you expect in the short term, in what is a macro bull period, but in the short term. And there is still that wild card, and it's during these lull periods when we expect a bit of a dollar spike that the demand destroying event has a small chance of possibly occurring. Eventually it will occur. And I think this year is it. It's an election cycle. It's a QE and quantitative tightening cycle year. Every 4 years since you know when, since 2020, don't mention the name why, 16, the Shanghai Accord, 2012, QE 1, 2, and 3, and 2008, yep, you remember that one, I bet, subprime. Yep, we have a quantitative easing and quantitative tightening cycle based on 4 years. And then, surprise, surprise, you have a Bitcoin cycle, which is going to have pumpermentals, but has often had a final washout before you get the pumpermentals. Back to the Bitcoin chart to remind you of that final fact. There's a nice little move. Woohoo! That's great. Let's go and have a look at the big time frame to show you why. Take that off. What happened last time? That was the 14K, down, down, down. We were waiting for the halvening. Here was your bull run. This is the bit you're all waiting for. That's the part that everybody is saying, when bull run? Well, you're in a bull run, but you're not in the spike phase like this part of the action. And what happened just before that? Crash, the quantitative easing, the end of the tightening into an easing cycle. That occurred there. The washout, and you go up with much less. And the deep pockets, who don't want the retail to make the money, they pick up all your extra that you become a forced seller on because you're over leveraged and you don't understand money management and volatility of assets. You get washed out there, and eventually you're scraping together a couple of dimes to make this bull market when you had hundreds of thousands in before. Why? Too much too soon, not prepared to expect that there could in fact be a washout before this trade plays out. Smart money knows everyone waiting. Everyone is waiting for that dump. This time is different. Well, it's going a little higher. I think it might technically run that 50K. It might not. I don't need to wait it out. No leverage, back to investment. Defensive position is my positioning for this period. And you get to decide what you will do yourself. Thank you very much for watching. Hit the like button, hit the share. This is a live stream of the Crypto Sniper to you. First link in the description below. Book a call. You too can be getting updates like these on an ongoing basis on the traditional markets as well as the crypto markets that include commodities, equities. We've had some great runs on equities in different markets, indices. Yes, yes, yes. And so much more that we don't speak about here. You too can come and check us out in our new platform, by the way. Looking absolutely dandy, upgraded and beautiful with the app to boot, with all the new setups and the chats and all the chat rooms. Come and be part of those that are preparing for resets. Yes, it's coming whether you want it or not, my beauties. It's coming whether you want it or not. Are you prepared? Build wealth, retain that wealth, and be prepared, and all aspects that are entailed therein. Till next time, catch you later. It is Francis Hunt, the Crypto Sniper, saying salute, goodbye.